and welcome. Of course, it was expiry day. It was a dull day of trade on Tuesday, but nonetheless, we saw decent amount of strength shown by broader markets. They held up fairly well for themselves. Let me take you through the headlines for Tuesday's day of trade in Indian markets. The Indian benchmark indices ended lower after a volatile session. Banks led the decline, with PSU banks and bank indices among the top losers. ONGC and Adani Enterprises bucked the trend as oil and gas stocks gained.
The RBI has finalized its ECL norms, keeping provisioning requirements tight and offering no major relief to banks. PSU banks are likely to see a sharper hit due to lower buffers, with higher credit costs expected to weigh on profitability and return ratios from FY27.
Maruti reported a mixed Q4. Revenue growth remained strong at over 28%, but margins and profitability missed estimates, with higher costs and lower other income weighing on the bottom line. The company has declared a dividend of rupees 140 a share.
And Eternal posted a strong Q4. Revenues rose 6% sequentially, while the profit jumped over 70% on a sequential basis. EBITDA and margins improved sharply. Blinkit turned profitable at adjusted EBITDA level, with quick commerce growth remaining robust. Food delivery growth continues to inch closer to long-term targets.
Vedanta heads into its final consolidated quarter before demerger, with a strong Q4 expected, driven by higher aluminium, zinc and silver prices, along with softer alumina costs. Street estimates point to robust revenue and EBITDA growth. Key focus will be on management commentary on the demerger roadmap.
Okay, lots to watch out for on the show today. We have Mr. Kunal Parar's stock ideas on the technicals, what's looking good and what is his outlook on trading the market. And of course, Q4 corporate outlook with all the managements that we've interacted with earlier in the day: M&M Finance, City Union Bank, Piramal Finance, as well as AU Small Finance Bank. So of course, it was a day of financials and so many stocks to watch out for from that basket. You're watching Market Edge with me, Snehisha. With me is Harsh Saita. And let's take a look at how the markets have panned out in trade. You had the financials basket that was in focus. One of the top losing sectors was the PSU banks and the private banks alike, because you had the ECL provisioning norms by the RBI that has now been put into place permanently. So on a sectoral basis, you had some deep cuts on PSU banks, lower by 2.25%. Nifty Bank was also lower. This was followed by cuts in auto, finance, IT, realty, FMCG and pharma, seeing mild cuts. On the flip side, you had defense, metal and energy. These were the only three indices that have ended the day in the green. Nifty Energy was the top sectoral gainer. Of course, you had some very good gains on ONGC, Oil India, Coal India, Adani Total on the back of its earnings. So that basket looked good. From the broader end of the market, if I have to take you through what the Nifty 500 split looked like, 195 stocks in the advances with 303 stocks in the declines. So of course, the favor was in the bias was in the favor of the declines. And you had Motherson Wiring that's lower by about 4.5%, Tata Tech, Elecon, Zensar. All of these have reacted, some of them on earnings, and all of them have reacted in the negative territory. On the flip side, Cohance continued its strong show for a second straight day on the back of management rejig at the top level. 14% higher on Cohance. Tata Chemicals, Piramal Finance on the back of its earnings was very strong, 9.5% higher. Chennai Petro, RK Forgings, RR Kabel, all of these were stocks that have done really well. And of course, from the Nifty 50 group of stocks, you only had 19 in the green with 31 in the red. So the tilt was also towards the declines in this pack. ONGC, Adani Enterprises, Coal India, Reliance, Nestle, they did well. On the flip side, it was Axis Bank, Maruti, HCL Tech, Shriram Finance under pressure. Maruti lower by about 2.5% on the back of its earnings. And what was really surprising is a stock that was lower by about 3.5% on average throughout the day, which was Eternal, saw a very sharp turnaround and a good spike on the back of very good earnings that came in the last few minutes of trade. So you can see that speck of green on Eternal. That's a reversal from the day's low for Eternal and a good uptick of about 1% on that stock. Of course, more management commentary, everything is going to be at play, and the stock will react as well. But on that note, let's take the conversation ahead and get a check on how the technicals are shaping up in the market and what should your trading strategy be at this hour. We have Mr. Kunal Parar, the Vice President of Technical Research and Algo at Choice Equity Broking, joining us on the show. Kunal, hi, good to be speaking with you. Take us through what your reading is on the charts for the Nifty, given that we've seen a little bit of a cut today. There was lots of expiry pressure at play. What lies ahead in the near term on the charts? What are some levels that you're spotting?
Hi, good afternoon. Well, today was expiry and we didn't see any, high volatility that we was expecting during the monthly expiry. But yeah, one thing is there that Nifty has given its close below 24,000 level. Not only this, if you talk about the rollover data, rollover has happened at 68.23%. With a minor costing of 0.36%. Now this is at par level, so we are not expecting any kind of upside momentum during upcoming trading session. However, at the point of maximum OI and at the front of maximum option chain, I think we may see some kind of downside momentum because we are seeing some kind of short build up in call side and short covering in ITM put side and long build up in OTM call put side. So this kind of structures clearly indicates for some kind of further downside momentum if Nifty further breaks 23,950. And if it breaks this level, then we may see some kind of downside even up to the level of 23,600 level. So at this level, make and break level is like a 23,950. If it is sustained above this, then a smart recovery would be there even up to the level of 23,300 to 23,500. So one should remember this level. It's a 23,950.
Okay. Kunal, the bank nifty, that's where the pressure seems to be building up. You believe that there is a case for further downsides here? And what levels would you look out for if so?
Well, Bank Nifty, if you talk about, it has given its close at 55,400, and it was like much weaker than Nifty. And if you talk about other stock, then even private banks like ICICI Bank, HDFC Bank, SBI, and Axis Bank all dragged its Bank Nifty to its lower level. If you talk about rollover level, then we have seen some rollover at 76.38%, with rolling cost of 400 points of premium. Now, this indicates some kind of bounce back, but technical structure looks very weak. Option chain looks very weak. So out of three, two indicator looks very weak. So let's say if Bank Nifty sleep further, then we may see some kind of further downside even up to the level of 54,500. And if it happens so, then further drag towards the southward direction will be even up to the level of 52,800. So yes, it clearly indicates for some further downside momentum on the technical chart.
So that's something that you're spotting for the Nifty Bank. Amid a market like this, Kunal, anything from the PSU banking space that looks like a good opportunity to buy given the dip that we've seen recently in this index?
Well, at current juncture, I'm not seeing any kind of conviction move, particularly in any PSU banks. Even in today's trading session, SBI was down by 2%. Not only this, Union Bank, PNB, Canara Bank, all the stocks were down on an average by 2%. So one has to wait and watch. One has to use these wait and watch strategies for the time being. And the way all the stocks have formed, somewhere around the shooting star to BLE ceramic industries formations, yeah, we may see some further pains from the present level in this counter. So no recommendation, no convictions in this PSU counter at present level.
Okay. Kunal, oil and gas and energy is the one sector which is actually standing out in trade these days. Give us a sense, how would you play that? And give us your take specifically with regard to ONGC.
Well, energy performed very well in today's trading session thanks to actually Reliance. It was up by 1.5% after a long time. No, not only Reliance, but yeah, ONGC even performed very well, and it was up by 5%. Right now, trading at 301 level. Now, if you talk about ONGC, the way stock has been trading on its daily chart, stock has given a breakout of its 293 level. Now, this is the level which we were discussing continuously since last many days, and stock is sustaining above this level with enough volume activity. So we may see some further march towards the northward direction. If you talk about level wise, then somewhere around 370 would be the first level, and if stock breaks this level, then even a stock march towards the level of 350. Now that's the all-time high level that we can see in ONGCs. So this is not a perfect time to get into the stock for creating any fresh position because risk reward is not that much of favorable after seeing today's momentum. But yeah, if you have this stock in your position, then hold this stock. We may see very good upside momentum this counter.
Okay, so that's your take on ONGC. Kunal, your stock recommendations this hour, what's looking good on the charts?
Well, two stocks are there which looks very attractive at present level. First, Polycap. Right now, the way stock has been trading on its daily chart, it has given its close at 8,275. One can get into the stock at 8,000 level. If you talk about target wise, first target comes at 8,485, and if stock breaks these levels, then further upside would be there, even up to the level of 8,825. Not only this, Mahindra Life Space looks very attractive at present level. The stock has given its close at 337. One can get into the stock at present level with fixed stop loss of 323. For an upside target, first target comes at 348, and if stock break this level, then further upside would be there, even up to the level of 365. So Polycap and Mahindra Life, both stocks is very attractive at present level.
Okay, Kunal, on that note, stay on with us. Let's bring on board my colleague Raghav, who's here with a list of all the stocks that were in the spotlight on Tuesday's trading session. Raghav, over to you.
Well, absolutely, Snehi. Quite a bit of buzzers today. Speaking about a few, I have with me Eternal. It recovered from its day's low of 2.5% down to 1.7% up on the back of good results. Its revenue is standing at 17,292 crores versus 16,315 crores, up about 6%, which is in line. Their EBITDA is standing at 486 crores versus 368 crores, up about 32.1% QOQ. This is a beat from the street's expectation. EBITDA margins are at 2.8%, again a beat from the street's expectation. And net profits are at 174 crores versus 102 crores, up about 70.6%. QOQ beat for them. Other stocks that were in news are Cohance, which is up about 13.5%. Stock has seen a double-day rally post Umang Vohra's appointment as CEO, the ex-CEO of Cipla. Parimal Finance was up about 9.5%, reported a consolidated net profit of 502 crores for Q4 FY26, marked a steep 390% up on a YY basis increase. Nomura has maintained a buy rating for them and targeted a price of 2,150 crores. MobiKwik was up about 3.5% in today's trading session. 7.65% equity changed hands in two block deals for them. And MobiKwik, yesterday we also got to know that RBI has approved an NBFC application for them. Canara Robeco was down about 4%. It reported a mixed set while EBITDA was up 16.1% at 71 crores. EBITDA margins improved only substantially at 62.2%. And however, profits for them are down about 21%. Dalmia Bharat was down about 4% today. Profits for them are at 395 crores versus 439 crores, down about 10%. Revenue was up about 3.8% for them, although. Maruti Suzuki, on the other hand, was down about 2% on the back of better expectations by the street. Profits for them are standing at 3,590 crores versus 3,857 crores, down about 6.9%, missing street's expectations again. Revenue for them is standing at 52,449 crores versus 40,910 crores, up about 28.2%. Again, that is beating street's expectation. So that was it in terms of the stocks that stayed in news today.
Raghav, thanks so much for taking us through that. Kunal, I want to come to your view on Eternal, but before we do that, just want to take our viewers through what these numbers have looked like. Overall, looking like a good set. Revenue in line with our estimates with a growth of about 6% sequentially. You had the EBITDA, PAT and margins. All three of them did much better than our estimates. Food delivery revenue looked pretty okay, up 2.3%. In fact, we were expecting a little moderation here, so this growth is looking very good. The net profit is absolutely flat for the food delivery business. The NOV has declined by almost 1%. We were expecting a cut of 2%. So again, not too bad over here. The management says that the growth will continue trending towards their long-term expectation of 20% year-on-year NOV growth for food delivery, with margins between 5 and 6%. The adjusted EBITDA margin this time around has come in at 5.5%, which is their all-time high in this sector. So looking good for food delivery. Not as bad as we had imagined, if I had to put it that way. Quick Commerce has done well for itself. Revenue is up 8%. The management says that they expect Q1 FY27 to be better than Q4. PAT is up 31%. NOV growth is looking slightly weak at 8.2%. We were expecting 11%, so slight weakness over here. But they've said that the NOV growth CAGR should easily be north of 60% in the next 3 years. So looking good in terms of what the commentary is. They've also said that the path of margin expansion may not be linear, but what really stands out this time is that the adjusted EBITDA margin as a percentage of their net order value continues to be in the positive territory at 0.3%. Remember, in the last quarter, this was 0, and before that, it was negative 1.3. So their path to profitability at least is looking sustainable because they once again logged a very nominal profit over here. For Blinkit, the dark store addition is beating our estimates. Total store count now at 2,243. Weakness in going out and Hyperpure has come along the lines that we were expecting. It's slightly more weaker than that, but largely it looks like a decent set of numbers, and on an overall basis, it's a good set. LPG impact, they've not seen any impact of the LPG shortage so far, and the closing cash balance is also looking quite healthy. Kunal, well, that's the fundamental take on Eternal's numbers and looking like a largely good set. How are you reading the stock price? We've seen quite the dips and troughs on the stock price of Eternal in the last couple of months. What's the outlook ahead?
Well, if we talk about Eternal, right now it has been closer to 153, well below its 100 days moving average. And not only this time, since last many days, stock has been getting below its 100 days moving average, which clearly indicates some further downside momentum that we may see during upcoming trading session. Right, the upper side, strong resistance in form of 100 days moving average comes at 266. If stocks sustain above this level, then further upside would be there, but however, chances are very less to sustain above this level. If we talk about downside level, then downside is open up to the level of 234, and if stock breaks these levels, then further downside would be there, even up to the level of 215. So clear-cut opportunity is there in forms of channel rise strategies.
Okay, that's the take with regard to an Eternal. Thank you, Kunal. We'll let you go on that note. Thanks for coming in and giving us that perspective on what to expect tomorrow, especially in the day of trade. What we'll also do is slip into a very short break. We'll continue coverage on the other side of this break, especially with regard to what to watch out for tomorrow. Stay with us.
Back with Market Edge, and let's take a look at the earnings momentum across M&M Finance, City Union Bank, Piramal Finance and AU Small Finance Bank. With M&M Finance stepping up its provisions, you had City Union Bank remaining well capitalized with limited ESL impact and MSME-led growth. Meanwhile, Piramal Finance is expecting a strong FY27, and AU Small Finance Bank sees better place on deposits with stable microfinance. In fact, listen into the managements of all of these four companies. We spoke with them earlier in the day, and here's a snippet of all of those conversations.
Provision that we made for Q4, which is a number of 270 odd crores. The rationale for creating that provision was, as we are all aware, there is a certain conflict which is in progress. The West Asia crisis has led to some disruption. I did mention in my earnings call that we are not seeing any early visible sign of stress in our collection efficiency over the last 50 days ever since this disruption happened. We saw a big departure from H2 versus H1 in F26. We were able to catch a lot of the commerce that unfolded in the passenger vehicle segment, in the commercial vehicle segment, in the tractor segment. So as a leading vehicle financer, we were very happy to see a growth in H2.
Since we have our capital adequacy ratio well above, let's say 20%, we can afford to take that hit in the capital itself. And even after taking care of that, we should be adequately capitalized, and things should be in such a way that we will not be having any issue with the P&L on an ongoing basis. Even though the MSME, like agriculture loans, including the gold loan and all, constitute the most important part of our overall portfolio. The gold loan had in fact contributed for a significant growth in the last year, and we were able to get opportunities within our risk appetite, which we did not want to lose. So overall, we are currently at a situation where we should be able to see things in a brighter perspective as we enter financial year 27.
We expect our AUM growth to continue to be approximately 25% in this coming year. We have also guided that we expect our profits to grow by approximately 50% in this year. And thirdly, we have guided that we expect that in the fourth quarter of FY27, we will be able to deliver a return on assets of roughly 2.5% compared to the 2.1% that we delivered in this year's fourth quarter. So the legacy book, which ended this year at a little under 3% of our portfolio, will probably all but disappear during the course of this year. So what all we'll be left with is the core book.
If higher interest rates is there, it is always remain challengeable because we don't want to make our yield higher, right? So it depends, but we are much better placed than many of our competitors because we have right asset class and we have a right way to build deposits. So I think the biggest advantage we got in last 6 months is that microfinance has become more stable. Our credit cost around credit card is now coming down. The other classes also has performed better. It might impact us a quarter, maybe 3 to 4 month period. But in the long run, I believe that this year, this financial year, 26-27, will be much better than the last year.
Okay, so that's with regard to the financials pack. And in fact, let me go across to Meryl. She's here with what to watch out for the day of trade on Wednesday.
Yes, here are some of the important cues to watch out for on the 29th of April. Starting globally, US investors will be watching the Federal Reserve's FOMC rate decision, where a rate hold is widely expected. However, the commentary here will be the key. And alongside this, markets will also be tracking the PCE price index, which is the Fed's preferred inflation gauge. In Europe, watch out for the Eurozone consumer confidence data, while Japan markets remain shut on account of a market holiday as part of the Golden Week market week in Japan. Importantly, this is also where the Magnificent 7 earnings season kicks off. We've got results coming in from Alphabet, Microsoft, Amazon, and Meta. That's 4 of the 7 Magnificent 7 stocks in the US stock market. So global markets could be seeing some sharp moves on the day. But other global earnings to track include AstraZeneca, Deutsche Bank, Mercedes-Benz, Adidas, eBay, and many others. Back home as well, from the Nifty pack, Indian investors will be watching earnings coming in from Bajaj Finance, while other major earnings include Vedanta, Federal Bank, Adani Power, Emphasis, Navin Fluorine, and many others again. On the corporate action front, we're going to be seeing the boards of many companies consider a fundraise. These are the likes of Bajaj Finance, IIFL Finance, Lloyd Metals, Indian Banks, Maz Financial, and Wari Energies, all considering fundraising proposals. And finally, in other events, Prime Minister Modi is scheduled to visit Uttar Pradesh in order to inaugurate projects worth over 6,350 crores. So yes, we've got quite a busy day. We've got the Fed decision, big tech earnings, and also Bajaj Finance results, all lined up for the 29th of April.
Well, thanks so much for taking us through that. So that's everything you need to be watching out for very closely for the upcoming day of trade. But with that, we completely timed out on this edition of Market Edge. From Harsh, me and the team that put the show together, thanks so much for tuning in. Stay tuned to ET Now for more news and updates.